So, good morning, students. Good morning to all of you. Saranya, Mamta, I'm good hearing. So now, students, let's quickly then get started with our lectures. Have you all revised, students, yesterday's part? And if you have any queries, please quickly, you can ask me the query if you have any such queries. So do let me know. I can just quickly resolve before we start in the next 2 minutes. Do let me know on that. Amrita, good morning. Ujjwal, good morning. Any query, students, very quickly before all the students join, and then we can start with this. Shali, good morning. I think you can type your query, students, and I can just start with your permission. Can we start with the remaining quickly? We can finish it off first. The balance part of transfer pricing, and then I'll move to the equalization levy. So in this session, students, our focus would be on completing the balance transfer pricing. Hopefully all of you would have gone through. I have forgotten, students, just because yesterday I was not that well, so just that thing skipped to my mind. I will be giving in the description link of the video all the yesterday's videos, also today's videos, also all the lectures that we have done of the English revision lectures that we have done up till now. I'll just give them in the description link. That I'll do it by tomorrow, Monday. You will find all the links of those lectures which should be there. Okay. Markup cost is the comparable. Ujjwal, you will take the comparable data. Now, whatever is the comparable markup, that is what you take. Okay, and once that you take the markup, you will then do the adjustment relating to the uncommon factors between the two transactions, the comparable transaction and the international transaction, and therefore from that markup of the comparable data, you will then do the adjustment relating to the uncommon factor, so as to ensure that that markup is adjusted or aligned to the factors which are there in the international transaction. The factors which are there in the international transaction, and that adjusted markup is what you are going to add on the total cost of the international transaction. That will get you the ALP. Again, I'm repeating this markup percentage, Ankita. Ankita, I think today evening or maybe tomorrow, because today is Sunday, today evening the first part of the Hindi will be released of 45 marks up till transfer pricing. Up till transfer pricing, Ankita, the Hindi part will be released. Okay, transfer pricing and equalization levy. So whatever I have done up till this, the same would be released in Hindi also today evening or tomorrow morning. Okay, so that will be released. Don't worry. Is that clear? So that is a recorded video which will get released. So Ujjwal, you have to then take into account what I have told to you. You will have to take into account the adjusted markup on the cost, because it's a cost plus method. So therefore, do ensure that the adjusted markup is always calculated on the cost. Resale price method, I told you that the resale margin that you have to calculate, that resale margin would be calculated on what is the percentage for markup. Percentage of markup, how do we know? We will not know beforehand. That percentage of markup will come to know only what is there in the comparable transaction. So the question will give you the comparable data, and in the comparable data, what is the markup? That markup is what we are going to select, and on that markup we will then do the adjustment relating to the uncommon factor. So markup is not fixed. The markup will be always given, would always be determined on the basis of the question that has been given to you, on the basis of the data which is available of the comparable. On that basis we will know the markup. Otherwise markup will not be known any method, whether it is a cost plus method, whether it is a resale price method, whether it is a transaction net margin method, you will never know the markup percentage upfront. Is that clear? The markup percentage will be known in the question only based on the data which is available of the comparable. Perfect. Let's then start, students. Now, students, I will quickly finish off the remaining part now, students, and the remaining part which you can all see. This is one theory question was being asked. Students, I think you should be clear about the concepts of transfer pricing very thoroughly, because ICI is using this transfer pricing topic both for practicals as well as on the sentence they will ask you theory. Like yesterday we did APA. So just read the important theory that we have discussed in the APA, because on the basis of that they will frame a question, they will frame a case studies, and that is very popular kind of a question which they ask in the examination. One very popular question, students, that we all know in the examination is that they will give you a case study on transfer pricing, and then they will ask you series of 5 questions. Small question, 1, 2, 3, 4, 5, and then each question may be carrying 2 marks. So what are they? Actually, you will realize that you actually may have to write theory, and only in that 5, 1 or 2 will have to do with some calculations. Only one or two sub questions in that 5 questions you may have to do some calculations. Rest of it you will end up writing only theory. This is the kind of the questions which we have seen also in the past for transfer pricing topic. So in the transfer pricing topic, this is also a very popular question, students, and that is one of the things that you should have a conceptual clarity so far as the topic is concerned. Now, one question which I will discuss with you, what the ICA has targeted in this DRP route. Every one of you just pay attention to this one now. Students, here in this case, please pay. No, 2 questions, students, 2 questions on DRP. I'll discuss 2 questions on DRP which was also targeted in your MCQ. Let's quickly run through this. First of all, students, the traditional route of filing an appeal. I think all of you are aware of the traditional route of filing of the appeal. So what is the traditional route of filing of the appeal? So this is what they have given it to you. You just focus on this particular chart, students, all of you. So just all of you focus on this particular chart, and as we all can know that first is you have to file the ROI, students. You will have to file the ROI, would be filed by the taxpayer. So the ROI would be filed by the taxpayer. That's the point number 1. So ROI would be filed by the taxpayer, and thereafter once the ROI is filed, the assessing officer will give the reference to the transfer pricing officer. So the reference will be given to the transfer pricing officer. Transfer pricing officer will then issue the order after examining the documents evidences submitted by the taxpayer. And finally, students, thereafter the assessing officer will pass the final order. See, these are the important circles which I'm making for all of you, because these are distinctions which you will find it in the DRP. So final order by the assessing officer after giving effect to the transfer pricing officer orders. Thereafter, students, if the assessee is aggrieved by the order, which he will be, then he will file an appeal. Now this particular appeal, student, will be filed before the CIT appeal. This particular appeal will be filed before the CIT appeal, and thereafter, students, it will go to the ITAT. After the CIT appeal, students, it will then go before the ITAT. Okay, ITAT, High Court, Supreme Court. This is the traditional route of going with that transfer pricing case. So how do we go about the transfer pricing case? This is how the assessment and the appeal follows. The assessment and the appeal. Now what changes in the DRP, both in the form of assessment as well as in the form of appeal, is given as under. Let's see the DRP route, and therein I'll take you through to the examination question. What kind of examination question in the MCQ was been targeted? First of all, here, students, the DRP route. Students, can you see that? The DRP route. Initial reference will remain the same, like the ROI and the form filed by the taxpayer. Then thereafter, students, the reference has been made to the transfer pricing officer by the AO. Thereafter, students, the transfer pricing officer issues the order after examining the documents evidence submitted by the taxpayer. And the point number 4 is the order by the AO after giving effect to the transfer pricing order. After giving effect of what? To the transfer pricing order. Okay, that is what is the entire scenario. Now see what happens here. Now this order, students, is known as a draft order. Students, you can write here in, this is a draft order, not the final order. This order that will be passed on by the AO to the taxpayer is a draft order. Now be very careful about it. Now on this draft order, the SSC has got two options. This is what was a question that was being targeted. On this draft order, the SSC has two options. One, he can place the objection on this draft order within 30 days before the DRP. But if supposedly the SSC does not want to go to the DRP, he can remain silent. He can just remain silent, just keep quiet. What happens? This DRP, this draft order automatically will become the final order. And that once it becomes a final order, accordingly you can then file an appeal before the CIT appeal. So here you have two options now. Option number one, go to the DRP and put up your objection before the DRP. Or option number two, don't do anything in DRP, stay silent, and after 30 days, this particular DRP order, the draft order will become the final order. And once it becomes a final order, thereafter you can go and file the appeal. These are the two options which are available to the SSC on the basis of the draft order that they are receiving from the AO after the transfer pricing officer has submitted its report to the AO. So if the DRP route is taken, students, if the DRP route is taken, then he is going to file an objection before the DRP. And once the objection has been put up, students, be very careful. Direction is given to whom? To the assessing officer. Once the DRP thereafter is getting the case and the objection from the SSC, the DRP thereafter will put up the directions to the AO. And on the basis of the direction, the AO will pass the final order before the taxpayer. On the basis of the direction, the AO will pass the final order, and thereafter the taxpayer will file the appeal against the final order. The appeal will be filed before the ITAT. Why it goes to the ITAT? Why not to the CIT appeal? Because the panel of the DRP consists only of the CITs. The panel of the DRP consists only of the CITs, and that is the reason why that against the final order passed by the AO on the basis of the direction that it has received from the DRP, which consists of the panel of the CIT, thereafter, if the SSC has any objection on this particular final order, he can file the appeal directly before the ITAT. Okay. From ITAT, it goes to High Court, High Court to thereafter to the Supreme Court. I hope that every one of you are clear with this one. No doubt about this one, now, friends. Fine. Now, one more question which is asked by the ICI. Please pay attention to the question. Question is this, that whether before the DRP the SSC will get any opportunity of being heard. Whether before the DRP the SSC gets any opportunity of being heard, that becomes the question. So here in this context, students, what could be our answer? So please be very careful. Here it is not like the normal hearings and all which takes place. No, you have the objection against the draft order of the AO. Please give the objection in a detailed manner. Please give the objection in the detailed manner, Amruta. And once you give the objection in the detailed manner, that is it. Then the DRP will see that objection, and on that basis, they will then decide to give the direction to the AO. So this is not like a normal hearing process wherein you are being called upon and then we will ask you something and then again you will come back and then I'll ask you something, then again you will come back. All these things are not going to take place so far as the DRP is concerned. It is simply put what it is in the objection that you put up against the draft order. In that itself, you need to put up your detailed explanation. Based on that, the DRP will do its study and give the direction. This is the process. So that is what it is, Saranya. This is the process. The 30 days that you are referring for, that is the 30 days is only in this context. So 30 days is technically in this particular context. So the process is very clear that you put up the objection within 30 days. That 30 days that you are talking about it is about to putting up your objection before the DRP. In that, you have to detail out every particular objection that you have against the draft order, and that is what I said to you. Once the objection has been put up before the DRP, thereafter nothing happens. Students, thereafter nothing happens. The DRP will then put up its study, will do its study, and on that basis they will give the direction. This is the way it happens. Okay, so therefore just keep this in mind, because this was also one of the question that was being targeted earlier. So I thought that just to giving you the insight of the same. After that, students, some point on assessment. This is also the additional point on the transfer pricing assessment. So we will do that, and let's then move to a last segment on TR transfer pricing, and we will then move to equalization levy. Yes, Aranya, the 30 days that you're talking about it from the top order, that is true. Now let's look upon to the additional points, students, on the transfer pricing assessment quickly. Now, students, just again request to all of you just to ensure to like this video, subscribe to this video, because this is the video where henceforth we are going to do all our revision lectures. Okay, so ensure to also share this videos, because people are in that other channels of the Unacademy, but there now we are not doing any of the video lecture. We will be doing in this particular channel. So humble request, 3 things. 1, like the video, share it, and then thereafter subscribe. Do tell them to subscribe this particular channel also. This is what it is, so that at least all of the students may be anticipating that the revision will come in other Unacademy channel, but the revision henceforth will come only in this particular channel. Okay, so that is the request, not only of my subject, all the subjects which are being there. So just keep that particular point, like, share, and subscribe. 3 things, students, just please request from your end. Now, coming on this one, assessment on the transfer pricing part. 2 or 3 important points are there, students. Just keep that in mind. First point is this one, students. Good morning, Sunny. Now, this is very important one. The order of the TPO is binding on the assessing officer. Again, May 16 attempt. Can you see this one? Students, just 2 points is very careful. You know, students, here the assessing officer gives here he will give the reference to the transfer pricing officer. Here he gives the reference to the transfer pricing officer. Similarly, the assessing officer also gives the reference to the valuation officer. I think many of you are aware in the assessment procedure, the assessing officer also gives a reference to the valuation officer. So the reference which the assessing officer provides or gives is, number 1, is in the context of the transfer pricing. In the transfer pricing, he can give to the transfer pricing officer, and second one, he can also give the reference to the valuation officer. Now please be careful. Once the transfer pricing officer gives its report, or once the valuation officer gives its report, question arises, can the AO deviate from this particular order? The question arises is what? Can the assessing officer deviate from this particular order? To that the answer is no. The assessing officer, students, in this particular case cannot deviate from this particular order. Meaning thereby, such order is binding on the assessing officer. So those orders are binding, and that exactly what this is the point. So AO cannot complete the assessment of income in disregard to the order of the TPO. That is the point. This is also, this kind of questions are very important, students. Please pay attention to this question. I'll quickly, students, revise this particular point with the 2 case studies. Again, this is a very important case study, students, expected in the examination. Please pay attention over here. So the question that comes is this. All of you, please be careful on this one. The question is this one, students. Supposingly, the Indian Associated Enterprise, the Indian A, students. The Indian A have sold, there is a sale, and the transfer price was at rupees 100. Sold to whom? To the, say, Singapore non-resident. The Singapore NR, non-resident A. Okay. Now, accordingly, whatever was the profit which was being there, say for example, profit was on 30. So profit was 30, and on this profit they took 10AA deduction. They got 10AA deduction. Thereafter, students, what happens was that subsequently the assessing officer, students, as you all are aware, the assessing officer, so the ALP that was being adopted was 120. Now, in that context, question is that with this 120, whether there will be enhancement of the deduction, whether there would be a proportionate enhancement of the deduction is the question to all of you. So students, what is your take? Enhancement of the deduction in this context? What is your take in this case? To that the answer is, students, no. There will not be any further proportionate enhancement of the deduction in this particular case. There is a specific proviso under section 92C which says that just because the ALP has been adopted, that does not change the commercial reality of the transaction. And the commercial reality of the transaction is that you have charged a transfer price of ₹100, and on that basis only we will provide you the deduction. So that is a specific restriction or specific prohibition to provide you the proportionate enhancement of deduction based upon the adoption of the ALP. So the ALP, once it is adopted, there will not be any further enhancement of the deduction. Did you all got this one? Now here I would like to compare. Students, be very careful. This is a very important stage. Sunny, Amruta, Saranya. Very important stage that we are in. Because I have to compare this with, students, in the case of, there is one issue. If you allow me, I can just discuss with you that issue, if you allow me. Otherwise we can proceed further, but still for the larger benefit I'm just discussing one issue. Students, supposingly, let's forget for the time being transfer pricing. For the time being, students, just forget transfer pricing. Okay, I'm just taking you right now to the profit link deductions like ATIA, 10AA, etc, etc. Now please forget for the time being all this. Please forget for the time being the transfer pricing chapter and just think of the ATIA and ATIB. Now in ATIA and ATIB, students, the profit which I have shown, the profit given by the SSC students, I will give you this note. The profit, students, which has been there, students, in this case is say rupees 30. SSC has declared a profit of 30, and on this profit primarily what has happened is that the deduction he has claimed of say ATIA or say 10AA, whatever it be. So he has claimed the deduction on this profit. Fine. Now what has happened, students, is this, that in the course of the transfer pricing, in the course of the assessment, I'm just telling you, forget transfer pricing for a time being and just think of it. In the course of assessment, the AO, say he has applied 43B, that is the deduction on payment basis, or the TDS provision of 40AI. So he has applied those provisions, and based on this particular provision, students, what he has done, he has disallowed some of the expenses, disallowed, say rupees, I'll just give a number to it, disallowed 10. Now if you know, students, in the assessment, if the AO applying 43B or say 40AI or any other disallowance provision, he is disallowing 10. So what is the revised profit? So the revised profit after the disallowance, students, becomes, after the AO's disallowance becomes how much? 40. After the AO's disallowance, students, it becomes 40, because originally SSC in the return of income he has shown the profit at 30. AO, after the disallowance that he has done in the assessment, he has made the profit at 40. Question therefore to all of you is that whether a deduction will also be enhanced on such disallowance, whether the deduction would also be enhanced on this particular disallowances that the AO has done of rupees 10. So whether my deduction will also enhance in this particular case, to that the answer is yes, it will be. Yes, it will be, Sunny. My deduction also will get enhanced proportionately in this particular case, students. So therefore, be careful, students. If at all the position that is there in your question is like this, that the SSC has given a profit of 30, the AO in the course of the assessment, he has disallowed some of the expenditure and has enhanced your profit to 40. enhance your profit to 40, then your Ujjwal, then your deduction of ATIA, ATIB, 10AA will be on 40 and not on 30. This is what is the concept that we have learned in the profit link deduction. But now compare this with what we are doing in transfer pricing. Compare this with what we are doing in transfer pricing. In the transfer pricing, if the profit is increased because of what? The profit in the transfer pricing, if the profit is increased because of the adoption of the ALP. So here the increase in the profit is contributed to the adoption of ALP. Whereas in the profit link deduction, the increase in the profit was on account of the disallowances. So therefore, coming on the transfer pricing part, if because of the ALP your profit has been increased, then that will not result into a further increase in the profit link deduction. Please take a note of it. Please take a note of it over here now. I'll give you a quick note. Students, as per section 92C, if on account of the adoption of ALP, the profit is enhanced, if on account of ALP the profit is enhanced, then below that, right students, then that will not result into a further enhancement of what? PLD. I'm just writing short form, PLD. What is PLD? Profit link deduction. As per section 92C, if on account of the adoption of ALP, please underline the word on account of the adoption of the ALP. So if on account of the adoption of the ALP the profit is enhanced, then that will not result into enhancement of the profit link deduction. That will not result into the enhancement of profit link deduction. Full stop. Okay. Now next line, students, please write. Next line, students, you will all write. However, if on account of the disallowances under the head PGBP, if on account of the disallowances under the head PGBP, the profit is enhanced. If on account of the disallowances under the head PGBP, the profit is enhanced, then such enhancement of profit will also result into the enhancement of deduction. Full stop. Fine, students. One very important question, students, just last point, students, before now we move to our next segment. This DRP will get over and so will be the assessment. Students, last point, students, please pay attention. The AO, just very important question for your May 22 attempt now. Supposingly, students, the AO, obviously the SOC has made an objection against the draft order before the DRP. The DRP has given the direction. The DRP has given the direction to whom? To the assessing officer. Based on that direction, the AO has passed the order. Based on that direction, the AO has passed the order. Fine. So therefore, the question to all of you is this, that whether, be careful, expected May 22 question, whether the order passed by the AO, whether the order passed by the AO on the direction of the DRP, on the direction of the DRP, can it be revised under section 263 by the CIT? Under section 263 by the CIT. I'm repeating the question, whether the order passed by the assessing officer on the direction of the DRP, can it be revised under section 263 by the CIT? Can it be revised under section 263 by the CIT? Students, what is your take on that? Quickly! Can it be revised by the CIT under section 263, students? Saranya? In this context, can it be revised under section 263 by the CIT? You'll say, sir, what is the revision provision? Can you tell us? So, students, as far as that provision of section 263 is what? That the order of the AO, if it is erroneous and it is prejudicial to the interest of revenue, the order of the AO, if it is erroneous and it is prejudicial to the interest of revenue, then yes, that order can be revised. So, in that case, that order can be revised. So, here the question is that whether in this particular case study, on the direction of the DRP, the assessing officer has passed the order of assessment. Now, the question to all of you is this, that whether the CIT can revise such order passed by the AO on the basis of the direction received by the DRP. So, answer to that, students, is, the answer is yes. The DRP direction on which the AO has passed the order, please be very careful, it still remains the AO's order. It still remains whose order? The AO's order. And therefore, if it is the AO order, the nature of the order is in substance that of the AO's order, then yes, the CIT can revise that particular order which the AO has passed on the basis of the direction of what? On the basis of the direction of the DRP. Now, many of you also say, but how that can be revised? Obviously, many students are getting this doubt in their mind. The reason is very clear. The CIT will look into it, that whether the AO has properly implemented the direction given by the DRP, and if the CIT feels that the AO has not properly implemented the direction given by the DRP, then in that particular case, that particular order of the AO is erroneous order. That particular order of the AO is an erroneous order, and if it is also a prejudicial to the interest of revenue, then can that be revised? Answer is yes, it can be revised. So I hope that every one of you are clear with this one, students. Now, this is what it is, students. Again, I'm repeating, students. Yesterday we have done with the transfer pricing. I'm just trying to wrap up this one. I will be giving the link of all the videos in the description box after the lecture. Not today's lecture, tomorrow, because the staff will not be there. So tomorrow I will be giving the link. Now with that, students, I'm done with that. Now, students, what is left? Let's try to deal with that one, students. What is left now? Multi-year data. There are two things which I'll now discuss, and that should be all. Transfer pricing is over from my side. Two things, students, now is left. One is this multi-year data concept I just wanted to discuss with all of you. This multi-year data. This is the only thing which has not been targeted by the ICAI up till now in the examination. And somehow or the other, I feel very important, this particular theoretical part. And I will make you understand, and obviously I would know that many of you would not have done it. So let's try to understand this particular concept. But before that, we will just look into this one. Students, here there is one very important point. Please pay attention. See, up till now, students, in the question, be careful, you have to solve at the end of the day. I am expecting how the ICI can twist it, and they have twisted it not long back. Just, I think, 2 attempts back only. Students, please read the question in your examination very carefully. Supposing, students, if they give you only one comparable data, and thereafter they will give you some uncommon factors between the comparable data and the transfer price, between the comparable data and the international transaction. So if they give you only one comparable data, it means that you will get only one ALP. Only one ALP, because obviously on the basis of the comparable data, you will adjust with the uncommon factor and you will get the ALP. 99% of the questions in the examination, 99% of the questions in the examination we have got up till now are based on one comparable data. So therefore, in that case, if it is one comparable data, apply the uncommon factor, get the ALP. But what if there is more than one comparable data? Then what you do? If there is more than one comparable data, students, in that particular case, the game changes. If there is more than one comparable data, students, then in that particular case, students, for each comparable data, be careful what I'm saying now. For each comparable data, you will apply the whatever is the only one method of the ALP will be applied. In whatever be the number of the comparable data, doesn't matter. You will apply only a single method. Always keep this in mind. And if you want to write in your own words, you can write it. If the question has got more than one comparable data, then you will ensure that in respect of all the comparables given to you, you will apply only a single method, which is the most appropriate method to be applied in that particular question. Only one method is what could be applied. Based on that, if you apply the methods of the ALP on more than one comparable data, you will definitely get more than one ALP. If you apply the methods of the ALP on more than one comparable data, definitely, students, you will get what? You will get more than one ALP. And if you are getting more than one ALP, then what happens? Then this is what it would be. Now, this type of question the ICI has asked once, wherein they have given you more than one particular comparable data to the international transaction. And what did I told you? You will apply only a single comparable data. You will apply only a single comparable data, get that more than one ALP. And then do what? Then do this. Students, be careful. Do what now? Do this. If there is more than one comparable, students, then in that particular case, students, the method, which method, students, in this context? The method primarily which would be applied will be any method, like cup method is there. The cup method, all the method except the profit split method. So here all the method like cup method, the cost plus method, the resale price method, the transaction net margin method. If these are the methods which are being put up and the comparable size is 6 or more than 6, and the comparable size, students, is 6 or more than 6. So therefore, just make this correction, students, in this chart, 6 or more than 6. If the comparable size, students, is 6 or more than 6, then the answer, as I told you, can be yes or the answer can be no. If the answer is yes, the comparable size is 6 or more than 6. If the answer is yes, then we all know we go with the range concept. And if the comparable size is less than 6, in a simple word, if the comparable size is less than 6, then what we do? We do the arithmetic mean. AM is the arithmetic mean of the ALP. The AM is the arithmetic mean of the ALP. So the arithmetic mean of the ALP is what needs to be taken into account in this context. It's an average. You will do the average of the ALP, and that is what it is. Now you have to see this point, students. Be careful. You have to see this particular point. And what is this particular point? If the difference between the arithmetic mean of the ALP and the transfer price, the difference between the arithmetic mean of the ALP and the transfer price, if that difference does not exceed 3% of the transfer price or 1% of the transfer price in the case of the wholesaler, then in that particular case, students, we will accept your transfer price because the deviation is not much. Deviation, when it is compared with, what is compared? The transfer price compared with the arithmetic mean. If the deviation is not more than 3% of the transfer price or 1% of the transfer price in the case of the wholesaler, then in that case, we will accept your transfer price. But if you say no, so the deviation is going beyond 3%, then in that case, the arithmetic mean will be the final answer. The arithmetic mean will be the final answer. Clear with this one? But what if the comparable size is minimum 6? What if the comparable size is 6 or more than 6? Then obviously, students, you cannot then go with what? Then in that particular case, students, you can never go with the arithmetic mean. You would then have to go with the range concept. Now, what is this range concept? Now, I'm just skipping, students, point number 1. This point number 1 in the box which is given below, because I will explain you the weighted average concept in my next particular last segment. So just look into this. Students, when you are having more than one comparable data, when you have got 6 or more than 6 comparable data, then range concept would be applicable. Then what are the steps that will be applied in the range concept? The steps are: number 1, whatever is the data that has been given to you, which is 6 or more than 6, please arrange the data in the ascending order. Ascending order means from lower value to the higher value. So that is how you have to arrange all the data. Give the numbering accordingly, like the lower number given with 1, 2, 3, 4, like that. So therefore, arrange the data in the ascending order from lower value to the higher value, and please give the serial numbers accordingly. And thereafter, check out how many data are there. Say for example, the data is 7. So once the data, you know it is 7, then the next step is take 35% of the data. 35% of the data, it will give you an answer of 7 into 30% is 2.1 something. So you will then take the next number, which is the next number, 3. In the decimal, you always go with the next number in the range concept. So you will go to 3, and against 3, what is the ALP that has been mentioned? That is the first range that you have got. That is the first range that you have got at 35% of the data set. The next is just 65% of the data set, which is 7 in my example. 65% of the data set, which is 7 in my example. Take that. So 7 into 65, 4 point something, which you will take to the next number, which is 5. So against number 5, what is the ALP which has been given to you? You will take that as your another range. So now you have got the range from at 3, what is the number, and at 4 and at 5, what is the number, and these are the range, and check whether your transfer price falls within this range or not. Your transfer price falls within this range or not, and if it doesn't fall within in this range, then in that particular case, students, you will then proceed to determine the ALP to be adopted for the purpose of the transfer pricing adjustment. And for that purpose, students, you then have to take 50% of the data set, meaning the 50% is the median. So 50% of the data set, in this example it is 7. So 7, it comes to 3.5. If it is 3.5, what did I told you? You have to always go with the next number, which is 4. And therefore in this case 3.5 means the next number is 4. Against 4, whatever is the ALP, that is your final answer. And that is what you are going to select for the purpose of doing the comparison with the transfer price. The difference will be the final transfer pricing adjustment that you have to do. Now there is a second particular point here, just keep in mind. Supposingly the data set is, instead of 7, it is 8. Instead of 7, it is 8. So the 35%, 65% that we have discussed will remain the same. But thereafter, once you establish the range, once you have established that particular range, and you find that the transfer price is not falling within this particular range, it is going beyond this range, then what did I told you? Then you will take 50% of the data set, which is the median, and therefore 50% of the data set is how much? 50% of 8. By doing this, you get an absolute number of 4. By doing this, you get an absolute number of 4. Now in this case, The range concept does not require you to go with the absolute number. The range concept does not require you to go with the absolute number. So now since you have got an absolute number 4, which is 50% of the data set of 8, 4 is there. So what you do is this, that in this case, they have said in such case, what you need to do, whatever is the value at 4 and whatever is the value at 5, take the average of the two, and that average will be the final ALP, and on that basis you will do the final transfer pricing adjustment. On that basis, students, you will do the final transfer pricing adjustment. Himachal, I hope that all of you are clear with this one, students, in this context. With that, students, this is all about the range concept which I have talked about it. And now the most important point, which many of you are not aware of this one, and this is about this one. Be careful, students. Multi-year data. What is this concept of multi-year data, students? Students, here, in fact, what we are given in the question, this multi-year data, students. Sunny, this multi-year data. Students, here let's have a look. In this multi-year data, students, what exactly it is? Students, the three methods, where is the margin which is involved? In which methods that we use the margin? In which the transfer pricing method we use the margin? So there are the three methods, which is the resale price method. There we take the margin. The cost plus method. There we take the margin. And also the transaction net margin method. In that method also we take the margin. These are the three methods on which we are taking up the margin. Isn't it? So margin is what we take. Margin of the comparable. Margin of the comparable, isn't it? In these three methods, students, we take the margin of the comparable. Now, please understand this. The margin is depend on the two factors. Which are those two? It is the two factors are there for the margin. Which are those two factors? One is the cost, another is the selling price. One is the cost, another is the selling price. All of you will agree, Palak. One is the cost and another is the selling price. So therefore, this is the basis of getting the margin. This is the basis of getting the margin. I hope that every one of you are clear. Now, just imagine this, how sensitive it can become. Like say, for example, the COVID times. I am taking the comparable in the COVID time against my international transaction which I have done. So I am taking the comparables in this COVID times. Now in the COVID time, the government have told that please don't increase your price. Don't increase your price. You just ensure that the price is at particular level. And I'm following the government directive not to increase the price, just to maintain my price at a static level. Isn't it? So the cost is higher. But the government said to me that no, I should not be increasing my price in the COVID time. Now what happens? Is the margin which I'm getting it in this COVID time, is it a correct margin? Is it the normal margin? And the answer is no, I am not getting a normal margin now. Because I am being influenced. I am being influenced, whether government, whether external factor, whether this factor or that factor, to influence to keep my price on check. Similarly, there can also be some influence that could be done to keep your cost under the check. Some external factors. So what happens, students, please understand, these three methods are based on the margin. And the margin is a factor of two. One cost and another selling price. So just imagine if you take 1 year only as a data of comparable, if you take only 1 year as your data of comparable, and any unusual that could happen on either the cost factor or on the selling price factor, then the margin that you are adopting for the purpose of application in these three methods, the margin itself is not reliable. The margin itself is not reliable. And that is the reason why they are telling you that please don't take for these three methods when the margin is the basis of doing all the adjustment to determine the ALP. When the margin is the basis in this three particular method, so they are saying that please don't take only the current year data. You also have to take up the last 2 years data. So the last 2 years data of what? Data of cost and the data of selling price. and on that basis come up with a weighted margin. The margin that we have to determine has to be the weighted margin, students, and take up that weighted margin, and ultimately that weighted margin is only what would be considered for the purpose of determination of the ALP in these particular three methods. Which three methods? The method is resale price, cost plus and transaction net margin method. Why not this particular concept is applicable to cost plus method? Why not this particular concept is applicable in the comparable uncontrolled price method? Why is it that in the comparable uncontrolled price method, this weighted average or the multi-year data as the concept is not made applicable? What is the reason? The reason is very clear. Comparable uncontrolled price factor does not talk about the margin. It talks about the absolute number. And it is only one variable that plays out. In the comparable uncontrolled price method, it is only the one particular variable that plays out. What is the variable? The variable can be either we are comparing cost or maybe we are comparing the selling price. So that is what we are doing the comparison so far as the comparable uncontrolled price method is concerned. So since the variable is only one factor, which is either the cost or the selling price, therefore in this particular case, for the cup method, we are only going by the data of the current year. We are only going by the data of the current year. We don't go with the 3 years data. But when it comes to resale price method, cost plus method and the transaction net margin method, the 3 years data is what you need to consider and start determining the ALP based on this 3 years data. And what is this 3 years data? The current year plus the last 2 years. The current year plus the last 2 years. Is that clear to all of you students? All of you are clear with this one? Now I will show you through a practical problem, because otherwise you will not appreciate the discussion that we have done it right now. So maybe one small question was there here. Where that question has gone. One quick question, students, we will be doing on the multi-year data. This is what it is. Please have a look. VSI. Can you see that, students? All the students, do request to all of you, please like the video quickly, share it and subscribe it. All the revision lectures now henceforth would only be in this particular channel. Okay? Of Unacademy, all the revision lectures are in this particular channel only. That's my humble suggestion to all of you. So in the chart, students, you will find this particular VSI Limited question. What it says, VSI Limited, an Indian company, is a captive software development service provider of FSL Limited, a company resident in Singapore, which is a holding company of VSL Limited. So holding company means this relationship is established, AE relationship. VSL has earned an operating margin of 4.16 on the operating cost from the international transaction entered during the financial year 21-22 as under. So in this case, from the international transaction, students, international transaction means transaction with whom? International transaction means transaction with whom? Transaction with their non-resident AE. Transaction with their non-resident AE. So with the transaction with the non-resident AE, the margin that they have earned is 4.16% on the cost. You have been given operating revenue, operating cost and the operating profit. Obviously, students, I can see that if they are giving me, students, yesterday itself I was discussing this with all of you. And what was the discussion that we had in the yesterday's class? The discussion was this, that if you are given the profit percentage as a percentage of cost, the profit as a percentage of cost, it can be which method that they are talking about it. It is a cost plus method. The profit percentage as a percentage of cost, in this case, which method they are talking about it? They are talking about it about the cost plus method, or they are talking about the transaction net margin method. They are talking about the transaction net margin method, which is having the base with cost, which is having what? The base with the cost. I told you there are two variants. There are two variants of transaction net margin method. Which are the two variants? The transaction net margin method having a base with cost, and the transaction net margin method having a base with the reselling price. So, and what did I told you, students, yesterday? In the yesterday's class, what did I told you? That the transaction net margin method having a base with the cost, it is the same as that of cost plus method in the examination. So don't worry. Okay, the only thing that changes is in that transaction net margin method having a base with the resale price method. And what is the change that is there? I give you the comparison between the TNMM method having a base with resale price versus the resale price method itself. And I told you where exactly the change takes place. The change takes place is in that step number 2 of the transaction net margin method and step number 4 of the resale price method. That exactly what the real thing was. I will be giving you the link, students, those who are watching the today's lecture. Primarily, I will give you the link of all the lectures in the description box, but I'll give it the link tomorrow. Now, accordingly, students, let's have a look to all of us. Here, Palak, here in operating revenue, 250, operating cost, 240, operating profit, 10, and thereafter, students, 4.16 is what is the derivation of how they have determined the operating margin vis-a-vis the operating cost. The operating margin vis-a-vis the operating cost. So this is a derivation. Please be careful, students. Please be very careful that this is the data is in respect of the international transaction. That is a transaction with your non-resident AE. And who's a non-resident AE? FSL Limited. Now compute the ALP and the primary adjustment to be made on the following data. And what is that, students? The ALP to be computed. There are 3 data that they have given to you. Students, there are 3 data that they have given to you. So 3 comparables are there. Okay, 3 comparables are there. And can you see that, students? Current year is financial year 21-22. And what did I told you? Weighted average would be for the other 2 years also they will give it to you. So other 2 years are also given to us. So financial year 19-20 and 20-21. Now what to do in this regard? Students, what to do in this regard? This is what we will have to do. Please pay attention now, one by one. It's an easy one. Don't worry about it. Just you need to understand it. It will become very easy. So first is, students, you need to compute the weighted average of this thing. So how you do this? Students, of all the 3 years, as I told you, weighted average. You have to, for multi-year data means what? Multi-year data means all the 3 years you add up all the operating profit and add all the operating cost. Add all the operating profit and add all the operating costs. So by adding all the operating profit, 12 plus 10 plus 35. So in this case, 12 plus 10 plus 35. In this particular context, students, it becomes what? In this context, it becomes 57. Operating profit, students, in this case is 57. And same is also here, 150, 100 and 225. This is 475. Same way also you will do the total for this. Take the total of all operating profit and all the operating costs. Please take the total of the thing for all the 3 years. So the 3 years data of the operating profit and the 3 years data of the operating cost is what you will take that into account. And once you have taken this into account, accordingly, students, see what happens. Then you take the weighted average. Now you get the margin, students. Now you are getting the margin. So this margin is not based on the single year data. The margin, students, in these 3 methods should not be determined on the basis of a single year data. Single year data. The margin that has to be determined in these 3 methods will be on the basis of, will be based on the 3 years data. So the 3 years data should be considered to develop the margin of the comparable transaction. Now please pay attention in the examination. In the examination, students, if they give you only one comparable, if in the examination, students, they will give you only one comparable, my job is over. Only one comparable, if students, they are giving it to you. So what you will do? If only one comparable they are giving it to you, so what you will do? That is it. 12% is my margin, and on that basis margin, I'll proceed and put up the number in the relevant step and develop my ALP. On that basis, the margin I will put up in that particular relevant step of that particular method and I'll get my ALP. That is what I do. But here I've got 3 comparables. So do you know, if the comparable size is more than 1, then but less than 6. If the comparable size is more than 1 but less than 6 students, then what you do? If the comparable size is more than 1 but less than 6 students, then in that case I take the arithmetic mean. If the comparable size is more than 1 but less than 6, then it is the arithmetic mean. That has to be considered. Now, therefore, I get 8.74. I get what? 8.74. Now 8.74 is the operating margin which is there, versus your operating margin was something around, how much was the operating margin, friends? Somewhere 4 point something. Let's take that even the difference is 4 point something. I'm not aware now. 4.1 supposedly. Now difference is some 4 point something. The difference is 4 point something. Now this difference is more than 50%. I can see. Leave aside, the tolerable difference is only 3% of the transfer price. The 3% is what can be tolerable. But here I can see the difference is not 3%. It is more than that. The difference is huge, students. The difference in this case is huge. And that being the case, students, I will then reject what? I will then reject this particular, the operating margin given to you in the international transaction, and I will recompute the ALP based on the margin margin which I have got, which is 8.74. So 8.74, students, is my final margin in this case, and on that basis, how do I go about it? TNMM method is what I'm supposed to apply. So here, students, on the operating cost, students, on the operating cost of 240, please add 8.74%. 8.74% comes to 20.976. Directly the answer on the operating cost, because it is a TNMM method, students. Please pay attention. It is a TNMM method with the cost variant. So the margin has to be added to the operating cost of 240. I'm adding 8.74%, which gives me 20.976. So how much should be my arm's length price? Students? The arm's length price is 260.976. 260.976. This is the price which I should have charged to my Singapore AE. As against this, how much is the actual price which I have charged? The actual price, students, that I have charged is only 250. So what would be the transfer pricing adjustment? 10.976. Did you all got this one? This would be my transfer pricing adjustment. I hope that every one of you are clear with this. Any query on this method, I am open to that now. Any query on this method, students, I'm open to that, because I do understand many of you are doing this for the very first time. This is the only area which the ICI has not asked any question, and you have to be extremely very careful. I've told you the logic. What is the relevance of this method? Why the multi-year data is something which has been given to you in the question. Everything is known to all of you now. Isn't it? Multi-year data, why it is necessary for these three methods? Why not for the cup method? We have to apply multi-year data because it goes only with one variable. Either it would be to do with the cost or it will be to do with the selling price. But when it comes to these three particular methods which we are talking about it, in this case there are two variables that plays out. One is the cost and the selling price, and therefore we cannot be 100% sure that whether the margin which has been given of the current year is a reliable margin for these three methods. So therefore, to ensure to take out any doubt about the reliability of the margin, we go with the 3 years data. And since we are going with the 3 years data, students, what exactly we do in this regard? We are then doing the aggregate. And how to do the aggregate? I have shown to all of you the aggregate of all the profits and the aggregate of all the cost if it is a TNMM method. Had it been a resale price method, students, please tell me in the examination, this can also be a resale price method. Supposing if instead of this is a resale price method. In that case, what would be the data that will be given to you? Then the data that will be given to you would be operating profit and the reselling price. Because the margin that we require in the reselling price method is the margin of the profit vis-a-vis the reselling price. Margin of the profit vis-a-vis the reselling price is what we actually require in this particular case. And therefore, in this context, students, we say that this is the margin is what we will look into it, and based on that, students, there we will do in the reselling price the aggregate of all the profit divided by the aggregate of all the reselling price for the 3 years, and then the combined 3 years data of the profit divided by the combined 3 years data of the reselling price. You will get the weighted average margin, the reselling price margin. If it is only one comparable data given to you, absolutely no issues. go with that one comparable data, and whatever is that weighted average margin that you have computed just now, directly apply in that relevant step which I have taught you yesterday of the resale price method, and please get your ALP. Okay, but if it is more than one comparable which is given to you, if it is more than one comparable given to you, so for that many number of comparables, you will then determine the weighted average margin first, and thereafter, if the comparable size is less than 6, take the arithmetic mean of all the weighted average margin that you have determined in the above table. And once you took the arithmetic mean, that particular margin that you determine as per the arithmetic mean will now play out in your calculation. The calculation as per the relevant method of the reselling price. I hope that every one of you are clear with this one, students. All of you. And that exactly is the game that you will have to play on the day of the examination. Students, secondary adjustment, can I give it to you? I think secondary adjustment, students, all of you are clear. I will only discuss 2 particular points in secondary adjustment. There is no difficulty. Even you people are aware that secondary adjustment is an easy one. Although I have given one question here, Vishnu polymers, secondary adjustment, but only 2 or 3 points. I just need to discuss with all of you so far as secondary adjustment is concerned. So which is that 2 or 3 points? First of all, be very careful that 1 crore threshold is there. Students, this more than 1 crore threshold, important point, is used in the secondary adjustment. And also more than 1 crore threshold, students, is also used in 94B, the thin capitalization. So only when the threshold exceed more than 1 crore that these 2 concepts are applicable. Now there in 94B that we discussed yesterday was the interest payment. The interest payment should go beyond rupees 1 crore. The interest payment, students, should go beyond rupees 1 crore. That is what we have said in this last particular lecture. Here, students, here in this context, what do we say over here, students? Here in this particular context, students, what we say is this, that here in this particular context, students, what we say is this, that the difference between the primary adjustment and the secondary adjustment, the difference between the ALP and the transfer price, if it is more than rupees 1 crore, okay, then students, that additions that you will do in your solution, you will refer that additions as a primary adjustment, because the additions is going beyond rupees 1 crore. Okay, so if the difference is going beyond rupees 1 crore between the ALP and the transfer price, then in that particular case, that will be referred as a primary adjustment. Okay, now comes the concept of the secondary adjustment. Now the government will definitely add this difference in your total income. Not only that, they will also expect you that the difference should get repatriated into India. The difference should be repatriated into India within 90 days from the relevant date. Now, and if the difference is not repatriated into India within 90 days from the relevant date, then in that particular case, we will consider the difference as a deemed loan. And the deemed loan will result into the addition of notional interest. The deemed loan will result into the addition of the notional interest. The calculation of the notional interest is very critical. What is that? First of all, the rate of interest, and from which date the interest calculation shall be made. 2 things, students. When we have to calculate the notional interest, again I am repeating, the notional interest will come into picture when the difference you have not realized it within 90 days from the relevant date. Then in that particular case, the consequence will be secondary adjustment, meaning thereby the addition of notional interest, in the total income. Now that notional interest is based on the 2 factors. The 2 factors are, number 1, what is the rate of interest, and number 2, from which date the interest will be computed. So the first one, let's try to figure it out. The first one would be the rate of interest. The rate of interest, students, will depend upon what? The rate of interest, students, will depend upon whether the transaction, the international transaction, is it denominated in the INR or it is denominated in the foreign currency. If it is denominated in the INR, students, then the SBI rate as on the first day of the previous year, primarily whatever is the first day of the previous year. MCQ question, congratulations, the ICI gave you the SBI rate on the first day of the previous year as well as the first day of the assessment year also. Like for you people, the previous year is 21-22. So ICI had given you in the question 1st April 2021 what was the SBI rate prevailing, and they have also given you the SBI rate prevailing as on 1st April 2022. So question to all of you therefore is, students, what you are going to do? Are you going to go with 1st April 2021 or 1st April 2022? Then in that case, students, you all are aware it has to be 1st April 2021. The first day of the previous year, students, is what you always will keep in mind. So students, in this context, students, in this particular context, you will go with the first day, 1st April of the previous year. Whatever is the SBI rate given to you, that you will pick up, and on that please add 3.25%. Please add 3.25%. But if the international transaction is denominated in foreign currency, if the international transaction is denominated in the foreign currency, in that particular case, students, what is that you are going to do? Then in that case, students, you people will then do what? I think all of you are aware now. In that particular case, students, you are going to take up the 1st April of the previous, you will take up the LIBOR rate, whatever is the LIBOR rate which has been given to you, and on that LIBOR rate you are going to add 3% which has been given. 3% which has been given. So students, whatever is the existing LIBOR rate, on that you will be adding 3%. Now this is your computed interest rate. So this is your computed interest rate, and on this computed interest rate you are going to compute the interest liability. Now the interest liability will be computed from which date? Two options. From which date the interest liability will be computed? Two options. Option number 1, after the expiry of 90 days from the relevant date, that the interest liability would be computed. After the expiry of 90 days from the relevant date, that the interest liability would be computed, or the interest liability would be computed, after what, students? After the relevant date itself, from the relevant date itself, after the expiry of 90 days from the relevant date, after the expiry of 90 days from the relevant date, that the interest will be calculated, or the interest would be calculated from the relevant date itself. The answer is the interest will be calculated from the relevant date itself, from the relevant date. Now students, be very careful. When I say the word from the relevant date, it means, do you know what? That relevant date also needs to be considered in your calculation. The relevant date in your calculation, students, you have to be extremely careful. Be about that calculation, because this is where the ICI is going to ask you the questions in the exam. This question which has been given, Vishnu polymers, in this question you will get the message that in the relevant date, when you start calculating the interest from the relevant date, in that calculation you will also take into account the relevant date as well. I hope that all of you are clear with this one. Many students are asking, sir, what do you mean by relevant date? In a very simple terms, two things. One is, if suo motu the assessee is doing a primary adjustment in the ROI and the adjustment is more than rupees 1 crore, then the due date, not the date, the due date of filing of the ROI, is the relevant date. If the assessee is making a suo motu primary adjustment of more than rupees 1 crore in the ROI, then the due date of filing of the ROI, not the date of filing of the ROI. So the due date of filing of the ROI will be considered as the relevant date. And that relevant date, you will see within 90 days whether the assessee has repatriated that difference amount. If not, then the interest will be calculated. At what rate? I have told you. And the difference and the interest will be calculated from the relevant date. The interest will be calculated from the relevant date. Now the relevant date, students, as I told you, students, will be calculated from the date, relevant date. So here would be the due date of filing of the return of income. By the way, what is the due date of filing of the return of income? 30th of November. 30th of November. So from 30th of November, students, you are going to calculate the interest. So 30th November will get in. Are you getting this one? The second case of relevant date is when the assessing officer has passed the order and the order is accepted by the assessee. And the order is accepted by the assessee. So the date of passing of the order, students, the date of passing of the order will be also considered while calculating that number of days. The date of order would also be considered. Is that clear to all of you? So the way I'm telling you, in that first category wherein the suo motu case was there of the assessee doing the primary adjustment of more than 1 crore, then in that case the due date of filing of the ROI, becomes a relevant date, and therefore if the money has not been repatriated within 90 days from the relevant date, the interest will be calculated from the relevant date. In this example, it is 30th of November. Similarly, if the assessee does not himself do a suo motu primary adjustment, but it is done by the assessing officer in the order, and the order is accepted by the assessee, then in that particular case, students, I think all of you are aware, and the order is accepted by the assessee, then in that particular case, students, all of you can say what, students? Exactly, students. Exactly. All of you will say that the date of order will become the relevant date. But there is also one more variant, students. If the assessee files an appeal, then the appellate authority will pass the order, and finally that order is accepted by the assessee. Then the date of passing of the order by the appellate authority, which is accepted by the assessee, finally, that date of passing of the order will become the relevant date. And that date also would be counted while calculating the period for which the interest will be charged. That date also will be calculated. I think that this point I have made it very clear, and my humble suggestion is that immediately you will solve this particular question, students, and that should be all. Students. Fine. So students, I have done with the transfer pricing, completely 10 marks secured. What do you think? I have done in my revision, I am also doing with you practicals as well, because revision without practicals is no revision. Because these are the questions which are going to be there in your examination in the practical form. Now many students are asking, sir, from where we have to purchase the chart. I am just giving you the details of the bookstores, wherein you can just buy the chart, up to you. So that is the bookstore, friends. You can just contact them directly and you can get your physical copy of chart if you require it. So we are done with this complete, students. Now students, I will have to leave you today a bit early because actually I had an appointment of 11:15. I thought of doing the equalization levy, but don't worry, in the next session, in half an hour, I will be finishing off equalization. Equalization levy is very simple concept. There is only one equalization levy only which we have to discuss, and we all are aware, 165A. The 165A, the new one. And there are some amendments which are there, although the amendments I have separately covered in my amendment class, but still we will discuss the amendment in this equalization levy also. Okay, we'll still discuss the amendment for the last time. So I'm discussing the amendments also in my revision class quickly so that the things becomes comprehensive. Yeah, there are some standalone, like for example, reassessment 147. That reassessment already I have done it in my amendment lecture, so I may not do the reassessment again completely. Okay, because that has been done. So I will share you the link of that reassessment class. So obviously that will save our time. Okay, because I have done that amendment specifically in my lectures. Is that clear to all of you, students? Next Saturday, students, I think all of you are aware, our revision lectures are on Saturday and Sunday. Now next weekend, what is the target? Many students are asking the target for the next week. I am going to start with the trust taxation. Now if you want, I can do one thing. Saturday class, I will be using it for the topics. Which topics? The topics would be on the Saturday's class, would be on the equalization levy, the general anti-avoidance rule, the GAR provision, and the theory topic. The GAR provision majorly, and maybe the theory topic. Theory topic I am doubtful, but I'll just try. The theory topic is on the non-resident taxation. That is the next Saturday. Okay. So next Saturday, students, these are the topics primarily which I'm going to target for all of you. And next Sunday. So next Sunday, the topic would be trust taxation. The next Sunday, the topic would be trust taxation revision. So I'm already giving you the plan of action. Trust taxation. I think trust taxation itself will consume our time majorly because trust taxation is a game in this context. Okay. So trust taxation and maybe dividend tax. If you are fresh, I will take up the dividend tax also. Trust taxation and dividend taxation, the game changer, students, for your examination. These two topics I'm going to take. After that, the MAT and the other TDS, TCS would be on the next Saturday and Sunday. Next Saturday and Sunday would be MAT, thereafter alternate tax regime, and thereafter TDS and TCS. That would be on next Saturday and Sunday. And final Saturday and Sunday would be assessment procedure, penalties, rectification, appeals and revision. This is how we are going to go about it. Is that clear to all of you? Any particular concerns that you have about revision, do let me know. I will keep that in my mind. You'll say, sir, what about capital gains and other things? Fine. You want me to do capital gains? I'll then really require one more Saturday and Sunday. So that will spill over to March end. That may then spill over to March end. Is that clear to all of you then? Fine. So therefore, I can then do CG and the remaining balance small topic, whatever is there. Is that clear, students? Any queries? Now you are having it. So the next Saturday, the date, as you all are aware, would be 12th March and next Sunday 13th March. So I'm giving you the dates for 12th and 13th March. Then 19th and 20th March. Yes, Shali, dividend tax is done and surrogate tax. These are small topics. Surrogate tax again maybe a 1 hour revision time. I'll do that revision. Don't worry. But then I'll do it in the month end. Theory topics I've already told. Hear it. And our next particular Saturday, we will take the theory topic as well. Yes, Shali. Surrogate taxes 1 hour job is there. REIT. You want to, students are saying what about REIT, AIF and the buyback tax. The three particular area, I will take that into account in March end. The Saturday and Sunday which will fall in March end. Because now you can also see which, I think March end, all of you are aware, we are going to get it over. All of you can also make it out by March end, we are getting it over. This Saturday and Sunday I gave you the target. Next Saturday and Sunday also I told you what I'm going to do. The MAT, TDS and TCS alternate tax regime is what will be there, and I will try to use to complete. The surrogate taxes also on that next Saturday and Sunday. Which will make us to go to our final revision that we will do. The final revision, students, that we are going to do on the 20th, what would be there? I think 26th, 27th. 26th and 27th March will be the last session, on which capital gains and the other remaining topics I am going to target. Capital gains would be on 26th and 27th March. Not entirely capital gains will be done in these 2 days. Only one session I think would be required for covering up the entire capital gains, and one more session on 27th of March. By the way, students, RTP I am doing it right now. Wednesday or Thursday, mostly Wednesday I'll do RTP. I'll just let you know on that. Mostly Wednesday I'll do the RTP. But I'm just informing to all of you. At night I'm going to do this RTP December 2021. Timing would be at 10:30. Do ensure to subscribe to this channel and do like the video also. And please do share the video. Please, at least the students know what are the important topics that we are going to discuss in the coming this particular month. Revision is done. Many students are asking, sir, what about the case studies? The case study, students, which is there in terms of the recent ICI case study. Are you aware of that? I'm starting a series on the discussion of a recent case studies which the ICI has given it to you from from next Saturday and Sunday. From next Saturday and Sunday, I'm starting at the night 10:30 p.m. 10:30 p.m. is the timing. So in those, we will discuss the case study which has been introduced, the recent one, Saturday and Sunday. And you say, sir, it is only Saturday and Sunday? I'm starting from Saturday and Sunday, and maybe I'll take some more few weekdays also, because obviously Saturday and Sunday would be a huge gap primary. So I'll take some more weekdays also, but all at night at 10:30 p.m. That would be a special class in Unacademy. Students, that would be the special class in Unacademy. Okay, so that is one thing which I just thought of telling to all of you. That would be the special class. Where would be the link? Don't worry, I'll give you the link. In the next Saturday class, I'll give you that link of that special class also if you want. Is that clear to all of you, students? Now, students, very quickly, I'll make one announcement about our features in Unacademy platform. I'll take Palak capital gains. I had given you the date 26th of March. The capital gains would be on 26th of March. CA Iconic program, students, is the flagship program. All of you are aware that now in the Unacademy, we have got 3 programs that we are running. One is the Plus, which is the regular that every one of you are aware. The Iconic program, and one is the new program Lite, LITE. That is for test series basically. Now the Iconic program is the premium segment for all of us. PLD means, Shamnath, just tell me what is this PLD. I'll accordingly will refer this. Now, CA Iconic program is a premium segment for Unacademy. However, the price is not premium. The price is affordable, easy on pocket with all the features. The features are very distinguishing, game changing, and they are one-on-one doubt solving sessions are there with the exclusive doubt solvers who are chartered accountants. Evaluated test series programs are also there, in which very case every subject in that entire group you are having a graded test series program of 40, 80 and 100 marks. Every subject. Printed books are given. Iconic has this distinction feature because in Plus and in this case in Plus we don't give the printed books, but in Iconic we are. And the Discord is a discussion channel. Remaining features remain the same, students, which has been there in this context. One important point, now I think the evaluated test series I have already told to you. One important point is that, students, do tell to all your friends, colleagues, neighbors who are taking subscription, any subscription in Unacademy, to use the referral code CADS for any duration, be it 12 months, 24 months, 36 months, because by virtue of that you get a 10% outright discount. Please do tell them. Fine. Now, the query which Shamnath is asking is, by adopting the ALP, the profit increases, but profit link reduction is not allowed. So, suppose by adoption of the ALP by AO, the turnover crosses the limit given by the ATISC. That's a good question. That is 100 crores you're talking about, isn't it? That is 100 crores that you're talking about. The turnover of ATISC. In that particular case, whether in that case he will become ineligible, that is what you're suggesting, isn't it? To me, the deduction will still be available because he is taking the deduction as per the old one. The proviso to 92C says what? That, see, the turnover is the turnover as reported in the books. The turnover, Shamnath, that we take, is the turnover that we report in the books primarily. So that becomes the basis of deciding whether the SSC will be eligible for ATISC or not. Whereas ALP is the arm's length price, which is used only for what? Only for the purpose of computing your total income. So the ALP is used for a limited purpose. 92C themselves do a confession. What is the confession that the 92C does? The confession that 92C does is this, that they themselves say, students, that they themselves say, 92C themselves says what? They say that, look, we are doing this particular amendment, but that does not changes the commercial reality of your transaction. So the fact that they themselves admit in that proviso that this particular adjustment we are doing it, but it does not changes your commercial reality of your transaction, which we are going by the transfer price, So therefore, in that case, the ALP that is computed is used only for a limited purpose. What does it imply? What the proviso to 92C imply? The proviso to 92C imply that the ALP that is computed is to be used only for limited purpose. And what is the purpose? The purpose is only to do with the transfer pricing adjustment. The purpose is only to do with the transfer pricing adjustment. The purpose was never and is never. The purpose was never and the purpose is never to stretch this ALP concept beyond the territory. And therefore, so far as the turnover threshold for the applicability of 80 ISC is concerned, you will go with what is in the books and not what is determined as per the ALP. Is that clear to all of you? And that exactly is the game. So with that, students, we are done with this one. I hope that all of you are clear with this. See you on the next Saturday. Timing remain the same. The timing, students, all of you are aware. I'll be starting at 5:30 on the next Saturday. 5:30, students, on the next Saturday. Fine. Take care. Bye-bye.